Hello, everybody. Welcome to this weekly outlook. This is Joel Medina, and I've been absent for like a month, but it was worth it. I was doing a lot of traveling and taking care of businesses, and yeah, it was completely justified. So I was doing good things. So let's start with the gold analysis. Remember, this is for forex trading. This in this case, we're gonna do the gold USD, and let's start with the monthly outlook. And basically, we had a bearish closure. It did look. This happened like literally last month before this even tapped here. I shared pretty much everywhere. Discord, Telegram. What is the other one? This one, Slack. Shared with everybody about the what would happen if we tapped into the 1680 domain, right? Literally, look, pulled up the skirt, literally like we were expecting. Probabilities for tap from here and a massive rejection were way too high, and that's exactly what happened. So, 3-4 weeks ahead of time, we were already gonna, let's say that we were ready for this. Just so you know, I missed this buy limit by like 2-3 pips. Just so you know, I placed it. I was traveling, and when this happened, I think my buy limit was like around here. Yeah, it was like a 900 something. It never triggered. So, imagine how much it hurt. That's okay. So we have the monthly bearish, we have the weekly bearish. Now we have been going up in the last 3 weeks, but still the structure is bearish. So basically, what we would expect from the level at 1790 is a potential rejection either here or at the limit of the zone, which is a little bit higher. It's around 1780 almost, not quite, to be honest. There is a zone there actually, now that I think about it. But yeah, there is a zone there, but there's a previous zone below there which actually ends up around 1798, meaning yeah, that we might see actually an extra push up to this zone here before rejecting. So still we're bullish, right? So we're still, for the intraday, we should be looking for buys still. Nice trend line here, quite clean, like you can see it without even drawing it. And the moment you see a break below here, most likely you might see a double top before maybe continuing coming down, if price wants to come down. So for the bears, the structure would actually have to be, uh, you would have to break this level here. This is 1755, really nice level here. Look, the 4 hour structure, nice rejections, 3 times, 4 times almost, if you count this little guy here. And so what that means is that most likely, if you want to go for buy entries, you either go for them. Oh wow, that was New York rejecting this zone. Okay, so either from here, because now I see that this is also a nice zone here. Either you see a rejection from here, and maybe you'll get the interest from here to continue pushing up, because obviously buys are in place still. That's the scenario for buys. Small time rejections, or lower time frame rejections from here at 1760. I think it would be better lower. Yeah, around 65, 1765 area. Any rejection from there, we could maybe leverage and buy coming upwards, or just like a revisit to, this is a strong zone, by the way. Okay, so 1755 is really strong. You can see it clearly here. So any break below here and retap to this same level would actually be a nice sell continuation down here. Now, better for the sell scenario, believe it or not, you would actually want this to push up again, right? And actually reject maybe the structure around here where we had the peak, and see another rejection from here around, let's say, New York. you know what, if London pushes through and or pushes towards here, and you see another rejection by 2-3 a.m., if you happen to see on the 1 hour, let's say, another candle trespassing this zone here and closing above here, precisely anything above 1770 on the 1 hour, but with a big wick from here, there's a really high chance that the New York session is gonna push up upwards at least to 1787, and also continuation up to this level. That would be the intraday. And then for the, let's say, weekly, like we said, right? So for the weekly outlook, I would actually expect that if price wants to now continue the downtrend, since we already pushed upwards, it would have to actually reject yet again this zone here around 1795, like I said at the beginning. Remember, this is a really important level down at 1680. We have been mentioning this level. Typically, this is a place from where gold flips entire structures on the higher time frame. Look, this was a bearish, massive bearish structure coming all the way down here. Revisit and just look at that push again. Visit, look at this, like all of this, all the way up to the higher all-time high. So this is a really important level from where orders are being taken place. So even if price wants to flip the structure and become now bullish, this would make sense starting from here. So keep that in mind. For the bulls, it would actually be it would be better. Yes, I mean the bulls are in place yet, still, right? The structure is still bullish on the daily, even though the previous one was bearish. Most likely, if you see another week, like I said, coming down to this zone 1767, and you see this flipping and breaking above this daily 1775, there's a really high chance you fill up to this level here. Look left, look this. So really high chance that from here you go up here. So buys would be really nice from here all the way up to 1780. I mean, I think I already mentioned that. So yeah, we're fine. So that's it. Bulls still in place on the middle, on the dailies and below. Bearish on the weekly, even though we're coming up bullish, but still bearish structure. And yeah, that shouldn't be that complicated, honestly, because right now it's clean structure. So yeah, just try to go with the structure, with the trend if possible, but also look for zones like you know that gold loves zones. So just keep that in mind. For GJ, if we can maybe look at this, go a little bit fast here. The monthly still looks bullish, but a little bit messy, but yeah, it is bullish still. We have been rejecting up here. Yeah, not much to say anymore with the monthly. Now with the weekly, we could clearly see something happening here, which is we have some sort of a trend line here coming up, but also we have a bearish structure on the weekly, but it's really noisy, right? We have massive wicks up and down, but still you see the body closures, you know, just coming down. Like if you ever feel confused, just do this, right? Look, the line chart, look, structure clearly bearish, right? Now, no doubt there, but just in case you don't see it. So once you come down here, we grab liquidity from the major area, which is the 160.200. As you can see, we grab liquidity before here many times. So this could be it, right? Like the last tour from Michael Jackson. This is it, right? This could be it. This could be the place where we actually continue coming upwards. Now we would have to see this break of the 164.526 level. So on the daily, we're actually flipping a little bit actually bullish, because we had this bearish push, but then we had this let's say small resistance here, and look at this, it's pushing through. So this looks very bullish on the daily. The 4 hour, let's say, let's see. Yeah, so 4 hours pushing towards a liquidity level. You see this massive wick. All of this up here is looks like obviously was uh, nice orders being taken out here. Put massive through. Oh, and there's a nice level down here too, right at 161.200. Look how many big wicks coming down to here. So now we're at the limit or almost at the limit of the movement. So unless you, if you bought here, um, it's fine. But really, if you wanna, if I wanted to kind of do anything, would have been around here, right? From where we had this level here, right here would have been a nice buy entry. And right here, we're kind of like literally at the resistance. Not really a good place to buy, even if it fails this wick. This does not look smart, honestly, even though this looks like it wants to keep pushing. Wow, that's the 4 hour. Yeah, it just broke above the. Wow, that was a New York push. So yeah, there's a nice probability that you push through again upwards towards this level here, but that's not good enough. You're literally buying the resistance here, right? You're like way above the movement. So if you want to go for the buy, let's say that the scenario for the buys would be actually maybe another. Wow, it would be actually a nice if we could come here and reject from here through New York. Let's say that this rejects now and London pushes through, breaks below here. Anybody during London might take advantage of this rejection from here again with this massive wick closing below this zone again. Might be the key indicator. Actually, I would have to, yeah, because this broke way above here. So I would have to see maybe like another rejection on the lower time frame to feel good about it. And then this, the moment you see this eating this level here at 162.800, really high probability you at least come down to. So London might be the people that might take advantage of this if this really happens. 162.500 would be at a minimum, right? And then from there, we don't even know if this is gonna hold. Most likely, because this is a high velocity area. Look, played out perfectly. Did this and then replicated the same movement, right? Any type of entries. Oh, that was New York. Look at that. So after that, anybody that took advantage here, an entry would have been perfect because that was the intention wick. So look at that. So that was nice. I was traveling, by the way. So anybody that took that had a feast, just like this cell here. So that's it for the buy opportunities. You are at the very limit, so buys right here, not necessarily wise. Even if it fails that level, you would want to see if you want to buy again. Maybe you want to see, like I said, movement coming to any of those levels, either here or down here. You see around here, or down all the way from here. Now, the 4 hour has just keep in mind that the 4 hours actually bearish because right now we were bullish, but this thing was a support, and it was broken completely. I know that it came to the zone to grab liquidity, but I'm just talking about the structure. This is a technical analysis, nothing else. So if you go for the technicals, this is still bearish. It was bullish, but it broke its structure here, came here. This is bearish, so any rejection from here would be a double rejection, see, from the same zone. This is around 163.500, 164 is up there. But 163.800, 163.500, that whole zone here, if you see another rejection from here, then it would justify like another move down to here again. So that's why even if you see this breaking below during London, that might be a nice push still. The 4 hours still uh, actually sideways, but mostly looks like a break of structure. Okay, so the 1 hour is bullish, right? Yeah, the 1 hour is bullish. Look, just simple, bullish. So if you didn't buy here, here's not the best place, right? You're literally right now breaking the zone. It doesn't matter if it pushes through. I wouldn't really go for this necessarily. Sales below here would have to be justified by another rejection from this zone, closure below here, and maybe you could enter, from that level, from those levels, especially London. If you see this happening right now, which is 10:42 p.m. right now, if you see this, and then you come again here, and during London around here 1 to 2 a.m. you see another like rejection from here, big wick looking up, closure below this zone here, most likely that would be a nice sell entry, and then you would most likely eat this level up, and this might not hold, and that would be the one that brings price down to here, but you always go with the if, right? This is an iffy profession. If this does this, then we go with the probabilities to go up. If this rejects again from here, closes here, then we go with the probabilities of the sell. And yeah, that's how we move pretty much. But remember that the GJ structure typically goes for liquidity levels too, just like gold, just like pretty much all the pairs. So look for those limits, and this is a nice area to sell, not gonna lie, around here from where we had this. If you see another rejection around here at 163.800, that might be a nice place to fall from. But right now the structures, if this closes above this on this 4 hour closes like around here, be careful, because that still looks healthy structure to continue pushing through. So just look for those rejections maybe on the lower time frame, in combination with the opening of a higher volume session, maybe like London, let's say around 2 a.m. 3 a.m. Eastern time, or preparation for pre-New York. And if you see this breaking maybe like during New York, then you could actually expect this dropping at least to this level or this level. Look left, boom, boom, boom. Yeah, it should be a good level below here. So that's it. Two scenarios. So for the higher time frame, like we said, still bearish on the weekly, but daily is kind of like flipping. So we could actually see this. If we actually manage to break above this, we might actually even see this 166 level again. Look, rejected twice. So yeah, if we revisit here, I don't know if this is gonna hold a third time. Maybe a third time would be the one that actually breaks through, if it really wants to continue going up. If this actually holds, then yeah, it would be weird. But if it actually visits yet again here to fall, that would be not the typical move. Most likely the typical move to reject would be around this area, 164 here, and the limit being around those wicks here, but most likely this structure here. So yeah, I hope this helps. Remember to give it a like, and have a great and productive rest of the week. So I'll see you, maybe we do a live stream, who knows. So this was Joel Medina. Have a great week.